to discuss the latest decision by the CBN on the monetary policy rate, which was increased today to 27.5%, we have the Managing Director of Financial Derivatives Company, Mr. Bismarck Rewane, who joins us right live in Lagos studio. Thank you very much for joining us on the news at 10. All right, so we have seen different opinions when it comes to the latest GDP report. While some agree that the economy is gradually improving, others are saying no, it's a total no, nothing is changing. How does the CBN fit into all of these, especially when you consider the latest increase by 25 basis points of the CBN?
Let me clarify. GDP and growth are the objectives of the fiscal authorities. The Monetary Policy Authority confines itself and is focused purely on controlling inflation and managing the exchange rate. So, from the perspective of the central bank and the markets, a 25 basis point increase was considered a slap on the wrist on inflation, basically because the market expected a 50 basis point increase. However, you know it was only the day before that we got the GDP numbers. And if the GDP numbers came out at 3.6, so to speak, and then you have it 3 consecutive quarters of increases, it tapers the expectation of the central bank and says, okay, now we'll move, but we'll move cautiously so that we can begin to see the results. And the central bank governor said something very clearly today, that the lag between when decisions are made and when the impact is felt could be anything between 6 and 12 months. And if you look at when the central bank team came in, it was exactly 12 months ago that they came in. So let's go through this whole process. Why they did it, what the impact of what they did will be on the economy, and how will it affect the ordinary Nigerian. I think that is the most important thing. So let's go. As you can see, there's a slap on the wrist on inflation, and that's the central bank. And technically speaking, what we saw, right, the unanimous decision by all members of the MPC, it went up by 25 basis points. The cumulative, that is, it brought the MPR to 27.50. It is the smallest rate hike in 16 months, and the monetary tightening cycle is beginning to come to an end, assuming that inflation can be tamed. But what is important is that in the last 6 months, in the last 12 months, in the last 24 months, 9 times we've hiked, 0 times status quo, and 0 time reduction. But under Cardoso and his team, between October last year and November this year, they've cumulatively increased interest rates by 8.75%. The impact on inflation it has brought, cumulative reduction in inflation, is 6.55%. So you can say, technically speaking, it's working, but not, it hasn't brought it totally under control. So what to expect next? Now, the Naira, the initial reaction to this decision today, the Naira first fell a little bit, but then appreciated to 1,747. As the BDCs, there's no Naira in town. Good. The Nigerian Stock Exchange was flat. The average daily turnover actually dropped by 25% to 8 billion. And effective interest rates in the market stayed flat because the move is not significant enough, but it's just directionally right. And you can see here that the exchange rate has gone all the way this way. And now the big question is, what causes what? The egg and the chicken, or catch-22? Is it inflation that causes exchange rate to be weak, or is it a weak exchange rate that makes inflation to increase? So that's the question, and nobody has every answer is correct, and no answer is correct. Now, so you look at it, a misaligned exchange rate is taking its toll on inflation. The red line here shows inflation, but the blue line shows that at this time, in January 2023, it was 746 Naira to $1. It has fallen all the way to 1,710. At a point, it got to 1,900. So it's now 1,747 this afternoon. So how are we going to get inflation down and the exchange rate to appreciate? That's the big question. And how are they going to go about that? Simply, you're going to have to sequence a lot of moves. Okay. One, we had the good news of the GDP.
Yes.
We had unemployment numbers. So first of all, let's go back to this. Exchange rate has depreciated 31% in 8 months, but in the whole year, 47%. PMS price has gone up by 54%, but the good news is that Dangote has brought down the price of petrol down to 9.70, and most likely will reduce. Money supply growth has gone up to 63%. It was higher than that. And supply chain disruption, flooding in northern Nigeria, all of these things have led to to inflation. But now, how do we get inflation down? The real answer is that if you don't actually get the Naira to strengthen, then you can forget it. The Naira depreciation is a major catalyst of exchange rate, of inflation in Nigeria. There are other things that come in. So this was just the good news. GDP growth stronger. Port Harcourt Refinery commenced with 60,000 barrels. And also, you have unemployment. And you've got to take this with a pinch of salt. Unemployment down to 4.3%. Who is unemployed in Nigeria? Anybody who has worked for 1 hour in a week is considered to be employed. Quite frankly, I mean, with the minimum wage today, 1 hour wage is not going to take you past a couple of hours. So that definition can be ignored. Now, what happens next? And how does it impact you and all the viewers out there? And how will this affect the Christmas? But look at other African countries, right? Here is Kenya. The Kenyan currency has appreciated by 21% because they use interest rates and a couple of things. And GDP growth was negative. South Africa, very interestingly, the currency has appreciated by 1.34%. It's 18 rand to $1 right now. Ghana has pushed up interest rates, and their city is now at about 16 cities, and it has lost 23%. The big culprit here is Nigeria. Nigeria's inflation rate is 33.8, and now interest rates are 27.5, and guess what? The currency has lost 47%, and GDP third quarter is increasing. So high exchange rate depreciation is having its toll on inflation. How will this Christmas look for you? Well, first and foremost, some good news is that oil prices are $73 a barrel flat. Cocoa price is up 250% at $9,000 per ton. That means people in Osun State and Ondo State should be celebrating. LNG is up by 20%, and that's good. And the trade balance is positive. So this guy is wondering why, with all this good news, is the Naira suffering? What do we have to do to get the Naira out of its languishing right now? Next, so now this is the true value of the Naira. What we call the fair value is 1,009 Naira to $1. But the market value is 1,747. There's a big difference between one and the other. And the official rate is 1,675. How do we bring all those rates together? The Naira is grossly undervalued, but we need to do something about it. 1, combination of interest rates. 2, increasing output. And 3, confidence. There are so many things that are happening. Maybe when investment flows, when we begin to borrow some more, or how do we use the borrowed money? It's not just borrowing for the sake of borrowing. Is it being deployed efficiently, or is it just being used for leakages? So that's the big question. Nigeria has to confront the fact that we have no credibility, and people do not believe what we say. So, but they see what we are doing. Now, Christmas, and that is the end here. Christmas last year, palm oil was 6,000 Naira 5 liters. It's now 11,000 Naira. So you've got to consider that. Rice was 60,000 Naira a bag, 50 kg bag last year. It's now down to, it's 105,000, but it had gone up to 120 and 130 about 4 weeks ago. Tomatoes was 25,000 last year, current price 27,000, it's only 8% up. Gari used to be 23,000 last year, it's now 37,000, up 60%. And guess what? Eggs.
Eggs. This is most surprising.
Right. Eggs, 2,600 for eggs last year, now 6,000. But the chicken, remember chicken and egg we said?
Yes.
The price of chicken has gone up by 66%, while the price of eggs have gone up by 130%. Why? They come from the same chicken.
Sure.
But the difference is that layers are only 1/3 of the birds, because you have broilers and you have cockerels and layers. So what are we going to see at the end of the year, going into next year? Transport fare, Lagos to Benin, up by 150%. Turkey up 34% to 7,000. If you are flying from Lagos to Port Harcourt, you pay 320,000 Naira, up by 60%. Vegetable oil used to be 7,000 for a 5-liter tin. Now it's 23,000. So this is a tough Christmas. So no hampers yet, and December is next week. So nothing to celebrate. No hampers yet. The prices are up. So what happens next? In 2025, 1, Naira will appreciate, we think, by 10% to about 1,578. If the CBN keeps interest rates elevated. Capital flows will increase. The CBN has to have an auction system, has to announce and clearly defend that they should, and they will, I believe. Oil output will increase to about 1.55. So what do we see? Budget is assuming 1,400 Naira to a dollar. Last year they assumed 800 and we ended up at 1,600. Now they're assuming 1,400. We think that the Naira could appreciate by February to about 1,586. Last year, some time ago, I said to go to 1,200. I was wrong. Yeah. We were wrong because we underestimated the problems. Now, once beaten, twice shy. So basically, at the end of the day, November inflation will come out next week at 34%. Federal government will continue on conditional cash transfers to who and how, we don't know. National Assembly budget approval will be done in December, but the budget is one thing. As a tool for economic management, you have to see. Another bond issue under $2 billion of constant and periodic forex auctions. The Naira will appreciate, we hope, touch wood, to 1,550 by February. So that's it.
Okay, so we have seen all the numbers, we've seen all the products that have increased. Let's talk about the new Port Harcourt refinery that has come on stream now and processing has already started. How do you think this will in any way affect the economy and, of course, the ordinary Nigerian?
I think we've got to look at it in the context. How much did they spend to get 60,000 barrels?
Yeah.
They spent a whole lot of money and a whole lot of time. So, look, to be honest with you, anything is better than nothing. So it was languishing and wallowing. Now we got something. The sweetness of the pudding is in the eating. So Nigeria is going to be just, rather than being what I call it, than being just somebody importing and languishing, I think that what's going to happen is that the Dangote refinery becomes the price leader. The other refineries, modular refineries, and the Port Harcourt refinery, Warrior and others, when they come on stream, will be the price followers. Nigeria may become a net exporter of refined products, but generally speaking, we think that that industry is coming into equilibrium, and therefore, it is better than what we had before. Before, we had no refineries working, we had no investment, and we're importing, and there was a scam going on. Now, 2025 should be better.
Should be better.
We should have quality and quantity. But what we cannot guarantee is that the price of petrol will remain depressed. Right now, at 1070 or 970, really, we should be comme ci, comme ça.
Still comme ci, comme ça, but a little bit of hope for 2025. We all hope so. Thank you very much, Managing Director of Financial Derivatives Company, Bismarck Rewane, for your interesting thoughts on the news at 10.
Thank you very much for having me.